following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Mike in Wilmington. Hey, Mike, what's going on?
Hey, Tommy. How you doing, buddy?
I'm doing great, man. Yourself?
Good, pal. Good. I'm calling to give you a compliment because I just want your listeners to know that you are on your game right now. I've been listening to you for a lot of years, Tom, and you are on your game. And I'll tell you, I'll never forget you calling King Dollar back when it was in the 70s. You saying it was going here, and everybody couldn't even believe that it could even dream that it was ever going to go back to the 90s.
I appreciate the feedback, man.
All right, pal.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, a safe day. Let's make it a great night, folks. Be truthful with yourself. When you're truthful with yourself, you start to see everything as it is, not the way you'd like it to see. The wounds of your emotional body are covered by the denial system. When you look at the wounds, with the eyes of truth, you can finally heal those wounds. Market-wise, let's take a look at it out here. We have the Dow Industrials down 8, NASDAQ up 10, S&P's flat, gold contract up $4.60, trading at $1,345 an ounce. Silver up 4 cents at $19.85 an ounce. Platinum up $5, $11.55 an ounce. Copper down a penny and a half at $2.16 a pound. Light sweet crude off 37 cents, $42.66 a barrel. Bonds, 10-year note up 9 ticks, 132.11. 30-year bond up a full point, 2 ticks, 172.23. King dollar down 208 ticks, trading at 96.13. The yen is up 21 at $1.11, and the euro is the yen is at 101. The euro is trading at $1.11. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at it. Man, this is going to be a cool market to watch how this shakes out coming into the close. And this is why, folks. So the SPY hit today 218.76. You know, it's been in the exact same place now since the 14th of July. So what do? Well, bottom line, you get over all the highs. We're going to close underneath them. That's what it looks like. And the real question is that where is this baby going to close? So we're 218 right now. A close under 218.23 is a failure on price, failure on volume, okay? Now, that correlation, just so you know, when you get it once, that's good. Whoops, there he goes. Sorry, there we go. When you start getting it across all the indices, different ball game. And then we're going to go over to the DAX. I'm going to show you what the DAX did because it's the most deviant thing when you look at the world markets. We look at our own markets as to where we stand right now. So the way the SPY is trading right now, it looks like we're going to get a failure on price, failure on volume, all of the above. That it says you got a turn in the market wants to go south. We take a look at the NDX 100. Same setup in the NDX 100. We have with the NDX 100. You're at $116.91. Close under $117.04 would be a failure on price and volume. Because what we have here is this. We've done 10 million shares thus far. You're going into 23 million. 10 million is about as anemic as you can get. So let's say we get 12 million at the close. You get a close under the 117.04. That's a failure on price and volume. We go to the small caps. You take a look at the small caps. Same setup in the small caps. Bottom line, small caps really can't get any juice in them. We got to 122.63. You close under 122.58. Same type of setup. Now I'm gonna switch gears with you and go over to the DAX. The reason being is this. So what happened yesterday? This is the DAX in Germany, and the reason I'm bringing it up is that when you do get a failure on price and volume, well, guess what? You know that can turn right around and go topside once again. if you get a failure down the lows, same thing. Markets can turn. Bottom line is that that's exactly what you had today after the DAX failed on price and volume yesterday. Yesterday, bottom line, DAX couldn't handle 10,478. What does it do today, man? It takes off topside beyond belief. Okay, now, that being said and done, when we bring the DAX back and we take a look at it, well, bottom line, the DAX is still going into the downdraft that was out there from August 31st, and it has lighter volume. So we'll see where that shakes out. My point is that the DAX likes to trade like the NASDAQ. So if, in fact, we get this failure out here today, that's where the deviance comes in the marketplace. And deviant markets, folks, are just fabulous. And what I mean by that is the turn. If we get this failure on all these indices, I expect the turns right here. Gold contract. What do we have with the gold contract? What we have with the gold contract is this. We take a look at gold. Gold is... Okay. Gold contract had a price spread today of high of 1348, low of 1336. You've done 111,000 contracts. That's not even close. The gold contract, this is setting up a small ABC down. We came down with 223,000 contracts. You're going up with 111,000. No way. See, you don't want to be a. This gold contract wants to pull back somewhere into the 1278 area or to where it broke out from, which is a 1259 area. We're going to take a look at silver. What do we have with silver? Same type of setup in silver. Silver is up today with 40,000 contracts, which is pretty cool. But guess what? Not enough. Another B to C of an ABC structure on the way down. What we have with the silver contract had come down with 81,000. You going topside with 40,000. Bonds. We take a look at the notes first. What you have with the notes is this. The 10-year note is up with 81,000 today. This baby just refuses to die. That's the bottom line. Now, this is light volume on the way up. So the shorter term issue is that, bottom line, it didn't make the lowest swing point, which is $131.19. So what that's saying is that, guess what? It's going to try to get, not to the highs just yet, it'll try to get to the highs of last week, which was 133.04. And how we come into them is really going to be important because the correlation here has to do with when that bond starts moving higher, the markets like to sell off. That's what it comes down to. And that's what you had all day long today. If you see, all our markets were in the green, just slightly in the green, but they were in the green. That being said, what you had with the 10-year note as well as the bond, right from 7:30, 8 o'clock this morning, these babies were just crawling higher, higher, higher as the market was slipping. We go take a look at the 30-year bond. What do we have with the 30-year bond? Same type of setup inside the 30-year. 30-year bond right now is trading at 172.22. Now, the volume is picking up a little on the 30. It's 156,000 contracts. Hey, that's saying that's going to go for the 174.22. When you start putting that together, what that also is saying is that, guess what? This market wants to head south. And Wednesday and Thursday, you can get some volume in this market. Mondays and Fridays, slow market, folks. You stay right there. We'll come right back. Dow down 9, Nasdaq's up 10, S&P's are flat. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. The Dow right now is down 11. You get the Nasdaq up 9. S&P's a flat. Let's go to Dave in Boston. Hey, Dave, what's going on?
Hey, Tom, how are you?
Doing great, man. Yourself?
I'm good.
I heard you guys
Hey, I got a question.
Yeah.
Go ahead. Yep. Yeah, we got some good weather. We got some nice hot weather right now.
Sweet.
We need some rain, though. We need some rain. I think we're going to get a little tomorrow, maybe the weekend.
Nice. Oh, no, forget the weekend. All these people are off. It's got to come, let's see, tomorrow. That way everyone has a nice weekend.
We'll get it over with. We need a lot of it, so we'll take whatever we can right now.
Totally. So
I'm looking at Fossil. So they're coming out with their earnings tonight.
Okay.
I want to see, but I'm thinking about a straddle on it.
Okay.
Kind of like to do a straddle on around earnings time. The thing moved the last 3 quarters. The thing's moved about 30%.
Okay. So which one you looking at? Or which two you looking at?
Looking at right in the money. So I think right at the money.
Okay. So
and they expire Friday, obviously.
Which is nice, exactly. So you got a Fossils trading at 30.35. This is a consumer fashion company. Okay, so, and he's looking for movement. Oh, I see. Interesting. Oh, this is cool. Okay, he's going to get movement here either way. Ooh,
I mean, they're pricey. They're kind of pricey. They're, it costs about close to $5 to cover it, but.
Yeah, it would make sense. This thing can move. The last 2 earnings. Oh my God.
Yeah.
You're talking $16 in what? I don't know. Was that the next day? Yeah, $16 and $22.
Right. It moved. Yeah.
Okay, so
even the quarter before it moved.
Yeah. Oh yeah. No, I see it up there. Wow. Okay. So now the question is, let me put this on a monthly. Okay. So on a monthly. Oh, interesting. Okay. So this is going to be the challenge here, man. So this stock, folks, is down from $134. $134. It traded in November of 2013. Your high volume low on this, Dave, is the 3065, which was generated in November. And even though that what happened, folks, is they come out with earnings again, but guess what? It's lighter volume and it rejected on the first get-go on the way down. So let me see, 71 million. Then it came down with 47 million. So now the question is, can you get a bump to 41? Yeah, if you're playing a straddle, that's the way to play it. You could. Because the way this is set up, is that it is rejected lower price after this vicious downdraft. So you can get a dead cat bounce, man. And
yeah, I mean, on the downside, probably you think it's going to hold around that 26. I mean, the other way I was thinking of doing was
I think I don't see it breaking. I don't see it breaking, man. Just because. So watch. The month of May, you came to 2642. You did 47 million shares. Next month, 2603, 26 million shares. It's like, okay, man. It's that was the test. Now it's going to build cause. So yeah, it looks to me.
You think the bias would be the upside?
I do.
So what about the strategy of buying the stock and just buy a put to protect the put?
Yeah, you can do that. You can do
and
that.
You save at least the juice. You save some of the juice, and
Yeah, that's a smart way of doing it, actually. I mean, now that's on the monthly. Let me get this on the daily, because it's so scary doing that, because this has been such a disaster stock. Oh man.
Yeah. Right.
Yeah. No, you know what to do. Go with the straddle, man. And this is why. Okay, so what I did here, folks, is this. I put this on a monthly. So you got to remember something. When you trade, whether it's on the daily, the weekly, the monthly, you got to stay and expect that in that aspect, meaning the daily, weekly, monthly. What he's doing is doing a straddle, and he's on the weekly, because you're talking Friday, right? So when you talk Friday, this 2651 can get retested again, man.
Okay.
Yeah, it can.
Right.
Because on the daily, that has a high volume, man. On the monthly, it doesn't. On the daily, though, you can be right back down there, and you could score that way.
Right. On the downside, at least get my money back. Make a little bit. On the upside, it's a little bit more higher potential for some money.
Yeah, it is.
Okay. All right. I'll do that, Tom.
Have a great one, man. Have a safe one.
Thanks. Yeah, bye.
Let's go to Alex in Newton. Hey, Alex, what's going on, brother?
I'm doing good. How are you doing, Tom?
I'm doing great, man. Thanks for calling. Thanks for holding.
How's your few-week vacation?
It was fabulous. I had quite an adventure.
Yeah, okay.
I was out in the middle of the Gulf of Mexico in a nice storm.
Oh my God.
Oh yeah, not the first time, that's for sure. But it worked out good. But it was a workout, man. That's for sure.
I hope you didn't have a seasickness.
No, I don't get seasick, thank God. No. Yeah.
Okay, I'm worried about the Bostonians asking for rain. It's something asking for a trouble.
That's a fact. Listen, I know what you're saying, man. You better be careful what you ask for, no doubt.
What I'm asking for is for more volatility, and I don't care about the weather. It's for day traders right now. It's not a good time.
That's right. We need volatility. There's no doubt. No doubt. And what you can expect, you know what's going to happen. I think, Alex, this close today is really going to be intriguing, man, because there's no way that we actually should have failed today. You heard the beginning with the way that the DAX and the European indices traded. So this is really unusual. But when this is happening, you got to pay attention to it, because what does happen is that if all these indices fail, which they look like they're going to, in harmony, that's saying that, guess what? They're going to sell this thing down tomorrow. And now, when I say sell it down, folks, bottom line, if you have an expansion of volume on the way down, well, guess what? That would be a turn. If they just sell it down as light volume, guess what? You go right back to the highs again. But the way it's set up right now, this is about as deviant as you can get, that it's saying that it wants to be a sell down in volume. Well, they want to be a sell down. We don't know whether the volume's going to be there or not. So,
how much you expect the selling to me?
How much selling?
Selling, yes. What do you expect, like 2%, or?
No, on the larger basis?
Yeah, no, not. Yeah, on the larger basis, yes. I'm talking about larger. To me, it's like a week to 2 weeks.
Well, this can go, like the SPY can go right back down to 198 in a heartbeat, man. And we're 218. That's no big deal. It would have to make it through the beginning of the 24th first. That whole Brexit deal is going to get tested. That's my take on it. You once you get into the 24th, the top of the 24th, if you get into that at all, it's going to go to the bottom. So most times, though, you won't see that in August. Most times, you can drift down in August, and then at the end of August, yeah, you can get some action. Because what happens is this. So picture this, folks. This is a whole psychological makeup that happens also, is that you have everyone's on vacation. The markets have been calm. In fact, the volatility, hasn't been, it's been low a couple times like this in the last 12 or 13 years, okay? That means that everyone's placated, which is cool. The large money, when it's placated, that's cool because they can, stay cool and stay on vacation. What does happen is that if you get one jolt at all, then all of a sudden, especially when you're at highs like this, that money will get out of the market very quickly, because anyone that's been in the market long period of time, they know that probability-wise, if you're going to get a pullback, it'll be in September. That's just kind of, that's traditionally how it can go. So what more than likely happens is that is the chicken or the egg. Do you get one day of volatility, money managers start selling because they just don't want to lose the money that they're getting paid on, and does that get everyone else selling? You stay right there, Alex.
Thank you.
We're going to be coming right back, folks. Our phone number is 877-927-6648. Dow right now is up 2, Nasdaq's up 12, S&P's up $1.50. We'll be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Hi, I'm Steve Rhodes, host of the Trader's Edge Heard Daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's up 2, Nasdaq's up 12, S&P's up $1, and we are talking with Alex from Newton, and we're going to be talking about Disney, Alex?
Yes, thank you.
Okay, so Disney's
coming. I went long today, and kudos to Steve Rhodes. I also pay attention to candlesticks, and today's to me is bullish engulfing.
Okay. My take on it is that it's going lower.
I'm talking about a few day trades. I'm not talking about long term.
I'm talking like after the close. So what you have here is this. You get a high volume low at $90 from August. You get a high volume low from February 12th at $86. And bottom line is that that just looks like to me it's going to go back and test this $94.
Do they have earnings after the close?
Yes.
Oh, okay. I'm not playing this. I'm out.
Yeah.
I'm not taking that anyway.
Yeah.
I can play options in this case, but not holding.
Yeah. 415.
Okay. No, I'm not doing that.
There you go. So you made money today. It's a beautiful thing. It's up 79 cents, right? Perfect.
Not much. I bought it around 15 cents.
Hey, 15 cents is 15 cents, man. You didn't lose money.
Yeah, I'll take that.
Cooking, brother.
Thank you.
Have a great one, man. Have a safe one. Let's go over to the oil market. So oil out here, folks. CLU6. We take a look at the oil market. CLU6. Where is she? Here she comes. Okay. Ooh, it's going to be intriguing. Now, man, this is a trip. Okay, so what you have with oil is this. Oil got over the highs today. Volume wasn't bad, but it couldn't hold 43.39. Let's see, USO. See, most times when you start a bounce, what's going on with oil is that when you start a bounce, this did fail today on price and volume. That's how it's set up. But I wouldn't be shorting oil right here. I'd be shorting oil up at ICE. ICE is laid out at $45.57. That's how it's set up. So this might back down a little, but oil went one way. Went from $52 June 9th down to $39. The trade is going short at $45.57. That's kind of how that's set up. If I go to the XLE, let's take a look at the XLE. So here, this is pretty cool. So the XLE, and this is where the correlation, this is pretty cool, folks. What is a really cool thing to do is that if you're going to go into commodities, there's, in oil in particular, you can go from oil to the XLE and see what the XLE is doing. So the XLE came down from $69, last week into $64. Does a bounce. Now the XLE, what you have is that you have $68.89 pushed higher yesterday, and you have the volume behind the move. So we did 21 million shares on the way up yesterday. You're doing 9 on the way down. That's saying that, guess what? This oil is not over on the bounce yet. And that's also a heads up in the S&P in general. So bottom line is that I wouldn't be shorting oil right here if that's what you were looking at. Inside the Dow Industrials, the strength versus the weakness, this is what we have. Strength inside the Dow is Disney. That's number one. That's going to be really intriguing, man, to see what Disney does at the 415 area. Pfizer, that's up 0.9%. Pfizer's up 0.5. United Technologies up 0.4, and Apple's up 0.4. Taken away from it, DuPont's down 0.7. Caterpillar's down 0.7. American Express is off 0.6, and Merck is down 0.6. Inside the NDX 100, what we have is that the strength is Charter Communications. That's up 8%. Microchip Technology is up 7%. Liberty Ventures is up 4%, and C-Trip is up 3.2%. On the way down, you have Norwegian Cruises are down 11%. Biomarin is down 4%. Stericycle is down 2%, and Discovery Communications is off 1%. Norwegian Cruises is just getting toasted, man. This has been going on for a while. So you have, actually, look at this, going to do an ABC down. So Norwegian Cruises, your A point on this is $50.30. Your B's 38, so you get $12. Your C's 44, that's 32, and you're at 38. It's going after that B point. Let's see what's at 32. Yeah, $30 is a little swing point from October of 2014. Yeah. Bottom line, that wants lower price. Some of the Dow stocks out here this week. You have Boeing up 35 cents, Cat's down to 54. We have DuPont off 47. If we go over to the GLD, we take a look at the gold area. What you have with the GLD is this, and you're gonna see this is like this is just slipping off the highs, but this is dangerous, folks. Okay, because it looks like they're the gold contract and the GLD looks like it's going to do a nice little ABC down. We had made a high out here with 7.6 million. That was the 2nd of August. That was testing 17 million. So 7 million versus 17. Your confirmation is you come off the high with 16 million on the way down. Now what's happening is that you're up with 6 million. So your correlation again is you're up with 6, down with 16. Guess what? Your A point, is 130.55. Your B is 127. So you get $3. Your C might be today, gets you $1.25. And what that'll do, that'll get you back to the lowest swing point of July 25th. And the real question is going to be then, do you have volume on the way down to get back inside the lower range? And, the way that this market looks to me is that I expect what you're going to see is that the broad market and the commodity market, meaning the golds and silvers, are going to move together. What had happened is that gold and silver equities and the contracts from January till June and July, they were the best performers. They're still the best performers in the whole market, okay? Huge moves, totally up. Those aren't going to crack either, really crack, until the market actually cracks. It's gonna be one of these that market starts going down, then they start selling their winners before their losers, and that will be some of the first ones, more than likely, that we see them starting to peel off. We go take a look at the... You stay right there. We're going to be coming right back. Our phone number is 877-927-6648. Don't forget, too, folks, today, Andy Heck, his special show, 5 to 6. This is his 300th show, folks. Beautiful thing. Congratulations, Andy. We love you. Stay right there, folks. We're coming right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. If we go over and take a look at the volume, when we're dealing with about 15 minutes left. On the NYSE, folks, you're at 536 million, so that's going to come in about 725. So that's definitely light volume on the NYSE, anemic volume. On the NASDAQ Composite, and this is the kicker here, 1.4 billion we're at right now. That's going to kick up about 1.6. And the composite, see, what's cool about the composite is this. The composite had shown, a couple weeks ago, you start doing about 2 billion shares. Got up there. Last couple of days, died on the vine. We'll see where the composite can close up 14 points. If it closes up 14 points, right now we're up 12, bottom line, that's not a failure. Where it has to close under 52.27. And you have 52.25 right now. So it's going to be really wild watching this thing come into a close. We go to the NDX 100. We take a look at the NDX. What you're looking at the NDX, right now that's up $10. We're trading at 47.95. The number on that is 47.99. That'll be a little bit harder to get to. Dow Industrials, we take a look at the Dow. Dow Industrials would have to close over 18,543. Now, that can do it. We're at 527. I don't expect it's going to do it, but you very well could do it. Russell 2000, what we have with the Russell is it has to close over. Now, the Russell has a shot at it, 1232.86, and right now we're 1231.78. So, bottom line is that these indices have been at the same place since July 12th. What we did get is that we got that spike on the jobs number on Friday. Bottom line, you haven't got any follow-through thus far to get to higher price. The deviance, of course, as I was speaking about when I first started the program today, is that you had the DAX yesterday, fell on price and volume, goes topside in a big way today. In fact, the DAX was up 2.5%. Now, that being said, that correlation is a correlation that you want to keep your eye on, because if, in fact, we have all the indices fail, that is a sell. You only get one or two indices fail, though, that wouldn't be a sell, because what would end up happening there is that you very well could, the NASDAQ could follow that DAX all the way up tomorrow. We go over to the IBB, the biotechs. They've been, basically seeing quite a bit of selling. The biotechs, the IBB is trading at $294. That just can't get any traction. It's not in trouble until it if it gets back inside the $287.77 price point. What that number is, that's where it broke out of its consolidation. So you stay above that, guess what? It could go higher. My take is that, it's going to build cause to get back inside of that area, and, we'll see just how that shakes out. If we go over and we take a look at CELG, we take a look at some of the weighting structures, you'll see Celgene is trading at 113. That gets back inside 111. That did come off the highs, with some volume. We look at Biogen. That was the one that got the IBB up to highs. That's a takeover candidate. Bottom line is that Biogen would have to get back inside like 290, and that's at 314 right now. Amgen, this is the other monster inside the IBB. Amgen is having a hard time holding price today. It's going to be intriguing to see if Amgen can get actually underneath the 171 first, at 171.93, and then the cook is going to be like, can you get down to the 164 area? That's going to be one of the big numbers. If you want to see how the energy downdraft has just taken apart companies, you get MTW, okay, which is it's a huge boom, tower cranes, all the above, boom trucks. That little baby has just got toasted, man. I mean, you're down 25% today. You're only trading at $4.77. This equity is down, from $10. When you see the numbers, though, the numbers that the oil market, how that no one's buying anything inside that oil market. Here you go. So check this out. In 2015, for the year, they took in $3.4 billion. They expect to take in $1.8 billion, just cut in half, just like that. Right, 1 year, cut in half. They were taking in $863 million per quarter every 90 days. Now they're taking in $410 million. $457. Next quarter, they expect it to be $410. And looking forward, they don't see anything getting better. So that oil market has taken some of these supply companies down the tubes and down the tubes. You talk about quickly, my God. That's about as quick as you've seen in a long period of time. We're going to take a look at the euro. What we have with the euro is this. Euro right now is trading at $1.11. You have a consolidation in place, and what's wide open for the euro to get tested again is this 109. The 109 is wide open, as is the 108. The yen, for all you folks that are in the metals market, the correlation in the yen, bottom line is that we're at 101.92, and we'll see if in fact this little baby can get weaker. The way it's trading right now, it's held this 100 area really good, because what you do have is this: as the yen, if you're in the gold or silver market, folks, okay, there's quite a correlation. I mean, every night, not that I keep the voice on, but I'm watching the Japan Open, I'm watching the Asian markets specifically for where is this yen trading. Because when the yen gets weaker, that pushes gold down. Gold and silver. The correlation is pretty direct. It's very direct when the yen's teetering at this 101 to 100 and 102 area. It's back down today. You're down 53 cents. We'll see how this shakes out tonight. But what we don't get volume inside of this correlation. What you do have here, however, is this. When the yen went topside July 11th, that broke the downtrend from $111. So when we bring this in, it's like, okay, well, maybe we're going to consolidate between it. We have not broke the downtrend in the yen, meaning the yen on a longer-term basis is still in a trend that it wants to get stronger. On a shorter-term basis, when we did go topside the week of the 24th, that's what took a topside the prior week of that, actually. You broke the short trend, meaning that you could get up to a price point of 111. Let's go to Jim in Minneapolis. Hey, Jim, what's going on?
Hey, Tom, how are you doing?
Doing great, man. Yourself?
Well, we're in the heat of the dog days up here. It's 90 and humid, and feels like Florida.
Wow. It's 80 here today. How's that?
Yeah.
Well, you know what it is? We've had this low pressure in the Gulf of Mexico now since last Thursday. So it's been, a lot of rain, but it's kept the sun away. So
Yeah, we've had just beautiful weather up. I mean, it's these are the, there's nobody in the office. Let's put it that way.
Yeah, I love it. Well, you stay right there. When we come back, we're going to be looking at Heckler Mining, folks. This is Tom O'Brien. We got Jim from Minneapolis, and the Dow Industrials right now up 2, Nasdaq's up 12, S&P's up $1.50. We're going to be right back, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. We're talking with Heckler, with Jim from Minneapolis. We're talking about Heckler Mining, large silver company, and bottom line is that this thing keeps heading higher.
Yeah, J.P. Morgan upgraded it today. They got around to it.
Yeah, well, my take on these, now this has been one of the strongest silver stocks there is. We went one way from $1.45. We're at $7 right now. Yep. I guess, you know how this game goes, Jim. I mean,
I sold half today.
Yeah, good for you.
So, I've sat on my hands. It's been due.
Yeah, so my take is that they're all going to take a hit. What has happened, not just in the metals market, folks, in the broad market, there's been a lot of secondaries that are out there, but in the metals market, there have already been 3 secondaries in the last 2 weeks. That dilutes the stock, and they haven't been able to raise money for almost 5 years. Meaning, the metal and mining companies. Yep. That's a very quick way. And now that you're telling me J.P. Morgan upgraded it,
they went to overweight.
Yeah. Well, we might hear in the next few days that they're doing a secondary.
Yeah. So in the big picture, so on a pullback, where would you say, you'd look at this thing based on volumes? Where could you expect it to go back?
$5.10.
Gotcha.
Yeah. It's a nice setup, though, man. This is definitely one of the premier companies, and this is a premier company, folks. If you want to hear a statistic, this is pretty cool. This is the oldest mining company in the New York Stock Exchange. How's that?
Yep.
Isn't that wild? Yeah.
I've got a good friend of mine is writing a big article on them actually right now. I'll send it to you when it's done. But,
yeah. It's a good company. They're taking $642 million. I've had Baker on, Phil Baker, nice guy, smart guy, been around forever.
I actually own some of their bonds too that have actually worked out really well.
Yeah, no, there's no doubt. There's no doubt.
But it just seems to be a divergence if you look at some of these smaller names that have, some are working like a Heckler and some are going backward or doing nothing.
Heckler has, there's no doubt. But we also know, the Heckler, folks, has a huge amount of dirt in the ground that they can mine, which is always helpful. What happens in the mining business, it's like in the real estate business. If you have the land and it's been expensive and it's in your pocket and things come back, guess what? It's worth the score. Big time. Same in the mining business. They've had the land. They know where they can mine inside. So picture, in a mine, folks, what you want to understand is this. Picture you get a big backyard. And if we go to the left-hand side of your backyard or the right-hand side, there's in different parts of your backyard has better ore. And that's what you're managing all the time. And that's what Heckler's very good at. And, so bottom line is that, I suspect that's why they continue higher. And then, of course, money managers know Heckler because they've been around so long. So,
gotcha.
But if you have a great one, Jim, have a safe one.
Okay, thanks.
And if you want to see what happens, folks, on secondaries, just go over to IM Gold. IM Gold, beautiful run. Okay, IM Gold has just run from $1.25, $1.95 up to $5.87. Guess what? It closed last night at $5.68. It opens this morning at $5.12. It's trading at $5.10. Why? Because you get a secondary on the market. VGZ. Now, same type of setup. They end up doing a secondary in the marketplace. That secondary VGZ had closed at $1.55, opens the next day at $1.20. It's trading at $1.16. The cool thing with these, yes, is that they get more cash. The bad thing, of course, is that it gets diluted, and it gets diluted very quickly. So after close out here, got a bunch of numbers. We'll see where this market shakes, rattles, and rolls, folks. This is Tom O'Brien. This is TFNN. We do appreciate you growling and prowling with us. Don't forget, today we got our man, Mr. Andy Heck, coming up right after me at 5 to 6. It's his 300 show. Technical Commodity Report. Great show, great newsletter, folks. You stay right there. We'll come right back.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Dell in Texas. Hey, Dell, what's going on?
Hey, Tom.
How you doing, man?
My call. Great.
Thanks for calling. Thanks for holding. Appreciate it.
I love your show. I just stumbled upon it probably, maybe a month ago.
And how'd you find us?
I found you on YouTube.
YouTube. That's a beautiful thing. Well, we appreciate you growling and prowling with us. Welcome to the Tiger family, man. Wow. I like it. Totally.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We're here 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Love coming out of you makes you happy. The whole world can love you, but that is not the love that will make you happy. What will make you happy is to share all the love you have inside of you. That is the love that will make the difference. Market-wise, let's take a look at it out here. We had the Dow Industrials up 3, Nasdaq up 12, S&P's up 1, gold contract up $4.80, trading at $1,346 an ounce. Silver up 6 cents at $19.87 an ounce. Platinum up $4. at $1,555 an ounce. Copper down a penny at $2.16 a pound. Light sweet crude off 26 cents, $42.76 a barrel. Bonds, 10-year note up 10 ticks, 132.11. 30-year bond up a full point, plus 2 ticks, 172.23. King dollar down 245 ticks, trading at 96.09. The euro is trading at $1.11, and the yen is at 101.94. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at it. Can you say failure on price, failure on volume on every indice, folks? Because that's what we have. This is going to get really intriguing. It's a deviant market extraordinaire. Let's go through this, baby. Okay, so what do we have? Take a look at the SPY first. This is what you have. Last Friday, we break topside. Volume is not bad, but guess what? You get out of the consolidation. The consolidation we're talking about is from where we were on July 14th. July 14th, the SPY is trading at 216 and 67 cents. Bottom line, you broke topside on Friday. No, not a huge amount, but you got up to 218.23. Bottom line, what do we do out here today? You get over it. We do 71 million shares. We do 50 million shares versus the 71, which, by the way, is still light. You close underneath it. Now, the ABC structure that we had was 218.90. You get 218.17. It's like, okay. Bottom line, what you're going to see as we're going through this, though, each and every indice failed. We go to the NDX 100. NDX 100, what do you have? NDX 100, 3 Qs today, get to $117.29. You get over the high of last Friday, which is $117.04. You close underneath it. You do 13 million shares. 13 million versus 23 million. That, folks, is highs with anemic volume. Distribution has been going on anyway. Bottom line, you get a failure. We go to the IWM, the Russell 2000. Let's go to the Russell 2000 first. Bottom line, failure there. This one is really a deviant one, too. Friday's high, you had 1232. Bottom line, you get to 1233.29. You close at 1231.62. We take a look now just at the correlation inside the SPY itself. SPY did 50 million versus the 71 million. Qs, same anemic deal on the way down. So now what does that set up? Now, that being said, this is the deviance part of this. I mentioned this in the first hour. The DAX, folks, had failed on price and volume yesterday. Then what does it do today? Today it goes up 2.5%. So that deviance of that, pay attention to it. My take is that we're going to fail tomorrow, but this is more intriguing to me that the DAX likes trading like the NASDAQ, and we see the DAX go topside. It takes that whole structure out. That being said, I suspect what you're going to see, you're going to see a slight turn down the market tomorrow. We'll see whether we get volume on the way down. And if we do have an expansion of volume, guess what? You're going to start heading down to the June 24th high first before that low. Gold contract. What do we have with the gold contract? Gold contract today looks like it's doing a small ABC structure on the way down. We went up $4.10. You're trading at $13.45. We had 113,000 contracts, and it needs a lot more than that, folks, because what you have happening is this, is that we came down last Friday in the jobs number with 223,000. You go up with 113. That's a normal B2C of an ABC structure on the way down. I suspect we're going to get down somewhere to 1289, 1250. It's a correction in a bull market move that wants to go higher. Silver, same setup in silver. You take a look at silver. What you have with silver is this. Silver today went up with 41,000 contracts. I believe 80 was on the way down. Yeah, 81,000 on the way down. Same type of setup. Silver looks like it wants to trade back into this $18 area. Right now, you're at $19.87. Bonds. Now, the notes, bottom line, all day long today, we're given the indication this market, you know, we really had a flat market all day, folks. It just sold off slightly. I mean, that's the reality here. But notes were given the indication that this wanted to sell off. All day long, since 7:30 this morning, notes start crawling up little by little by little. The notes right now are at 132.11. and they won't look like they're going to go for the lower swing high, which is 133.04, which brings you into the swing highs from July 29th, that is. The 30-year bond, same type of setup inside the 30. And, we'll see what they can handle up there, because the larger issue, really, I thought this thing was going to come back down to the lows that were generated out here from the June 24th area. Okay, that June 24th area bottom line looks like it still wants to get tested. We'll see how it handles first, though, this 174.22 area, because that is what it looks like it wants to go after right now. Dollar. Okay, so the dollar index, where are we with the dollar? Okay, so dollar index right now, this is where we're setting up with the dollar index. Dollar index right now is traded at 96.09. We did 12,000 contracts out here today. That is a pullback with light volume. We had gone up last Friday with 24,000. So the dollar index is also making its way up into this area of $97.62. That high that was up there on July 25th, it looks to me that high does want to get tested. We'll see how it handles it. Bottom line, I expect what you're going to see out here tomorrow is you're going to get a bit more volatility in the marketplace. What we're also going to get is this. After the close right now, well, we just closed, but at 4:15, when we come back after this break, you're going to get a lot of numbers coming out that I suspect is going to start moving this market around. The IWM, we take a look at the volume inside the IWM. What we have in the IWM is this. You did 12 million shares versus 28 million. You can see in each and every indices, they're in harmony. They failed on price, failed on volume. What does that say? That says you want to go south tomorrow. We'll see whether we get an expansion of volume as we head to lower price. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're coming right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We had the Dow Industrials close up 3, had the NASDAQ up 12. S&Ps were up 2.5, and as we do each and every Tuesday at 20 past the second hour, we got our man, Mr. Andy Heck. And don't forget, folks, Andy's got an outstanding show right here every Tuesday, Thursday, 5 to 6 Eastern Standard Time, and we got a big celebration out here today. This is Andy's 300th show. Have to love it. I want to congratulate him. It's a beautiful thing. Andy Heck, congratulations, man.
Thank you. How you doing?
I'm doing great, man. Yourself?
I'm doing good. I'm on the phone today rather than on the Skype. I'm having a little technical difficulties, but we'll get that worked out before the show.
We sure will. And if we come over to our website, folks, at TFNN, you're going to see right in the top of the carousel, Andy Heck, the $300 special for his 300th show. Now, this is only today, folks, okay? Andy's got an outstanding newsletter, the Technometer Commodity Report. That newsletter, bottom line, normally is $79 a month. You can get this newsletter today for 6 months at $300, which is $50 a month. And you can get that on a basis that it re-ups every 6 months at this exact same price. So
exactly, anyone who subscribes today will be locked in for as forever at the $50 level. So it's a savings of about $350 a year. So
it's huge, no doubt.
Yeah, we figured we'd celebrate by giving something to everyone. And I'll tell you, Tom, when I first started doing the show, my biggest worry, and I remember talking to you about it, was that I wouldn't be able to fill up an hour with what's going on in the world of commodities.
Wow.
And, each show I do, it's like I always wish I have an extra 20 minutes, a half hour, because it's just to pack so much stuff in. There's always so much going on.
It does. And I can tell you, so picture, like when I finish my show at 5, I go back to my office. I'm sitting down doing some work, listening to you, and all of a sudden the show's over. It's like, my God, an hour is long, but it's short. You know what I mean?
It's amazing. It goes so quick. It goes so quick. But
so tell us a little bit about the newsletter, Andy.
Sure. What I do in the newsletter each week, look, commodities are really important for no matter, even if you don't invest or trade directly in the commodity markets, to be a fully well-rounded trader or investor, you really need to know what's going on because they really affect the stock market, the bond markets, the currency markets.
Yes.
So what I do each week is I give the fundamentals and the technicals in each of the commodity sectors, as well as the individual commodities, over 30 each week. What I do in the newsletter is I give an up, down, or neutral call, and that changes all the time for all of these commodities. So it's a great ready reference if you are trading in the futures markets. And then I also give some recommendations when they present themselves in the ETF, ETN, or commodity-based stock or option markets. But the most important thing, I think, for the report is kind of a weekly call of up, down, or sideways. And I'm looking for inflection points in the markets when they get oversold or overbought on a technical basis, or when the fundamentals change on a supply and demand basis. So the subscribers get that on a weekly basis, and it is updated every Wednesday. Each report is roughly 5,000 to 7,000 words, which is, over 20 pages. So there's a lot of value there.
And what happens, folks, just so you understand, we're talking commodities, but understand that inside the commodity market, there's ETFs for all of these commodities. So Andy has given those recommendations for buying and selling the ETF structures So if you trade equities, great. Guess what? And you want to be in the commodity market, great vehicle to do that. Great, you know what's so cool, which, I know I've told this a dozen times, but it's so cool because when you do start understanding the commodity market, you understand the markets that we actually need. I don't, I trade the equities, but I don't need those equities. I need, food.
You need soybeans.
I need food,
steak.
exactly. I need
grain.
meat, exactly.
You need gasoline to put in your boat, in your car, right?
Which is cool. Nah, it's huge. It's huge, man.
Absolutely. It's so important. And by the way, all of the stocks that we buy and we hold in our portfolios or our IRAs or our SEPs, they all are at the whim of these commodity prices because they manufacture things and they turn on the lights and they power their companies.
Oh, just look at those oil stocks, man.
Right.
This is like, you talk about a stock getting cut in half, and when I first brought it up, Andy, it's MTW, right? So, when I first looked at it, I says, cranes, booms. I says, oh man, because why is this getting killed? I was thinking like it's a real estate business. I said, that doesn't make any sense to me. Well, sure enough, folks, what it is, it's the oil business, okay?
Right.
And, the stock has got killed. It's got cut in half. And guess why? Because their revenues have got cut in half.
Exactly.
So pretty intense, man.
Exactly. I mean, listen, oil has gone from $107 in 2014 down to $42 today. And it's, while it might go up a couple of bucks here, it's certainly not going back to $100.
Yeah. No,
that's for sure. It's not going. I don't think it's going back to 50.
Yeah, it's it's going to be interesting because we had a couple calls on it today, and it's like it failed on price and volume today, and it's just like I'm figuring like 45 is where ICE is. It's like, okay, somehow it's going to try to sneak its way up there, but
well, there's a lot of shorts in the oil market. Let me see. I do have my charts up, so let me put up an oil chart here. One thing that the one bullish thing I see about oil here, probably the only bullish thing here, Tom, because the crack spreads are coming lower, but open interest is up over 1.82 million contracts. That is high, and that means there's shorts in the market. In a summertime where there's not a lot going on in the markets, and there is a lot of bearishness in the markets, a lot of shorts can fuel a short covering rally. And I think that's what we're seeing.
Well, it's hot out, man. It's hot out, You need your shots on.
Right. That's right. That's right. That's right. Hey, it's hot out. So why is natural gas down 12 cents today?
Oh man!
Inventories are trickling in. So there's a lot of craziness in these markets, and I think that natural gas is kind of reacting to the rest of the energy sector as a whole here.
That makes sense, doesn't it?
Yeah. But natural gas is an enigma. There's a lot of stuff going on. As far as those agricultural commodities are concerned, keep your eyes open because Friday, the USDA is going to issue its monthly World Agricultural Supply and Demand Estimates report, and that is going to move the grain markets. The grain markets have moved way lower over the last month. I think the path of least resistance is higher if we get any surprises. I think all the bearish news are in those prices right now. Other things going on interesting today, sugar, man. Sugar back up over 20 cents a pound. Looks like it wants to try that 50% retracement up around 23 cents. Coffee is hanging in there. The coffee market is still above $1.40. It keeps trying below $1.40, but keeps coming back above there, which I think is a good sign. Keeps rejecting lows.
Hey, what is the cotton market like trading?
The cotton market it can be very illiquid. It could move like crazy, and it did today. Moved down 3 cent limit today. Pretty ugly there, but I think that's getting ready for the WASDE report because cotton, they will report on cotton and cotton inventories, and cotton has gone from 64 cents to 77.5 cents.
No, listen, man, I think it wants to pull back, to the breakout area of 66. I'd love to see it down there, the volume lighten up a bit, man. That could be interesting.
Yeah, absolutely.
You stay right there, okay, pal?
Sure, absolutely.
It's Tom O'Brien, Andy Heck, folks, and come over to our website at TFNN. You're going to see Andy's celebration. Front page. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Andy Heck, Tom O'Brien. We do appreciate you growling and prowling with us out here. And today, folks, 5 to 6. Well, every Tuesday and Thursday, Andy has an outstanding show, 5 to 6. Big day today, folks. Andy's 300th show. We have a special that's going on, and the special's only for today, folks, okay? If you want, if you listen to the show, it's a great show. If you have the newsletter, it's an outstanding newsletter. As Andy said, check it out. Right at TFNN. You can have a great deal today. It's only $300 for 6 months. Great, not only a great newsletter, it's a great education, man. I mean, you talk about an education, it's pretty phenomenal. The newsletter is normally $79. Bottom line, you can get it for $50, and you can lock it in. You can lock and load it, baby.
Lock and load.
Lock and load. It's a beautiful thing.
So I'm back on. I put on a nice shirt today for my 300th show, so I was disappointed I had to be on the phone for the
Happy
first
anniversary.
Anyway, so a couple of other things going on in markets. One thing we never talk about, very rarely talk about, I want to talk about today is, cotton's lock limit down, but lumber is lock limit up.
Oh, is it? Man, I better buy some more wood. I just bought a whole bunch of wood out of Georgia. Interesting. Okay.
That's it. Lumber is lock limit up 300. It's up to $332 per 1,000-foot board. Now, I never recommend anyone trading lumber because it's very illiquid, but it is a comment on the new home construction markets.
Totally. You know what I bought? Folks, this is so cool. So check this out. Of course, we're building houses, right? And I bought in Georgia, so picture this. What happens, folks, is that when you're putting hardwood down, the closer the grain is, the harder the wood is, the longer it will last, right? So I found these trees that they're all over 100 years old, Andy, right? And what they are, folks, is that these trees, Georgia has a lot of swamps. They've fall down over the course of years, and there's a mill down there that's been collecting these things, man, right? So bottom line, I got them. They're milling them up, sending them up, and it's only like $1 more than you buy engineered wood, and it's some of the best wood in the world. Isn't that a trip?
That's cool.
Yeah.
That's cool. That's cool. Georgia, I mean, Georgia, a lot of trees in Georgia, no question.
Oh, no doubt, man. No
Beautiful
doubt.
state.
Yep.
Absolutely beautiful
Totally.
state. So cocoa, bearish key reversal today, but cocoa's trading off the British pound. You know, Britain is the hub of trading for cocoa.
Is it? Okay.
You know, we went down below $1.30 on the pound today. A lot of interesting stuff. You know, I was just before I came on the air with you.
Yeah.
You know, as I usually do, I write up my show for the day, and then I get very busy writing all of my articles for Seeking Alpha.
Okay.
And I'm working on one now that I'll have coming out next Monday, but I'll give you a little preview. And basically what I'm doing is I'm building a case here why either a Hillary Clinton or a Donald Trump presidency are bearish for the stock market.
Okay.
And I really think, listen, the PE ratio of the S&P 500 is up above 27 times earnings.
I know, man.
That's very expensive. Right. So I guess the center tenet of my article is that, you know, in the case of Clinton, Bernie Sanders' challenge pushed her to the left, which means that, you know, the platform is more regulation. Certainly some higher taxes, more social programs, and that's not necessarily a continuation of the status quo. And the stock market has liked the status quo, although with Clinton, you get Yellen. With Trump, who knows who you get?
Yeah.
You know what I mean? In the Fed. And markets hate uncertainty. So with Trump, the issue is uncertainty. With Clinton, it's moving a little bit more to the left and abandoning the status quo to some extent, and either of which I believe is negative for stocks. And the presidential election will coincide with October, November, which is typically a bearish season.
I know, man.
For the stock prices.
Yeah.
So I'm not. I think either choice here is bearish. Their popularity ratings are very low, both of them. And I think that, you know, either one, we're going lower in stock prices. Now, can we go higher in the next month or so? Hey, absolutely. You know, listen, the magnetic draw of cheap capital to this stock market that draws money to this stock market is unbelievable. But like a game of musical chairs, it is going to end eventually. And, you know, things like gold are telling us, hey, there's some signs, there's some warning signs, there's some dark clouds gathering.
And what you have here, folks, is that, you know, on top of that, so the Fed meetings, okay, this is what's so cool about the setup right now. So you have the Fed meetings, and the Fed meetings, you know, your next one is September 21st. Now, with the jobs number, will they go up September 21st? Well, the betting inside the market, meaning the Fed fund futures rate, is saying there's only a 24% chance of that. November 2nd is the one after that. There's no way they're going to go up on November 2nd when the election is the 5th or the 7th, okay? And then you get December 14th. It's like, okay, man, you know, they may want to go up, but guess what? You know, the market is saying that the first chance they have to go up is March of 2017. So it's going to be pretty wild watching this whole thing shake out. But I absolutely, listen, I think, you know, today, Andy, was a big day in the marketplace because all the indices failed on price and volume. I mean, you get over the highs, had dramatically lighter volume, closed underneath them, and it was so subtle, it was so small. It looks small, folks, but the bottom line is we've been at the same place since July 14th. you know?
But Tom, it's a fantastic rally in the stock market. The S&P 500 is up 6.5% this year, but that is only part of the story because it was down 11.5% for the first 6 weeks of the year. So it is actually up by 18% from February 11th. That's a big move.
Well, I guess if if you got in February 11th, yeah.
Right? No, absolutely. No, but it's been.
No,
a
I
roller coaster.
get it. No, listen, man. There's no doubt. There's no doubt, man. You know,
it's a wild, rocky road, and listen. The one thing gold is telling me something. Look, gold can pull back to 1220 and still look amazing.
Oh, totally,
on a
man.
long-term chart.
Totally.
And you know what? It might have to put up a 1280 print here at some point, or silver might have to go down and touch $18 or $17.80.
But that would be normal. Yeah, I know.
That's very normal.
Right.
The one thing that's interesting, another thing that I wanted to point out to you, if you have a minute, is copper. Copper is down at $214.80 a pound.
Okay.
It's not all base metals. Nickel is up on the year. Aluminum is up on the year. Lead is up. Zinc is up. Tin is up. Iron ore is $60 a ton.
Yep.
The Baltic Index is up. It is copper, and it's all about inventories in China. So copper is sick on its own. It's not sector-wide.
Sick on its own. That's right. I like it. And no, I agree, man. You can see it. You can see that, a couple of the other base metals, just as you said, they got off the floor, and they're off the floor, period.
Right, they're off the floor, and they're off the floor well. Look, nickel is up to almost $11,000 a ton.
Right.
Even aluminum is doing okay, up at $16.43 a ton. So up like 8.5%, 9% on the year. Copper is just lethargic. And it's all about, what happened? It's like everything, Tom. The Chinese wanted to stockpile copper, and they bought copper until the cows came home. And they have so much copper and within the borders of China. And at the same time, the producers continue to grind out output. No question.
No doubt. Well, listen, man, I'm going to let you go. I can't wait to hear the show in another 20 minutes.
Thank you so much.
You'll be rocking and rolling. And, of course, folks, come over to our website right now. You can take advantage of the great deal that Andy's giving out here. It's $300 for 6 months. You're going to save $29 a month. Andy, look forward to the show at 5 o'clock, man. Congratulations.
Thanks, Tom.
Have a great one. Stay right there, folks. We're coming right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. Let's go over to Disney. Take a look at Disney. So Disney closed at 96.67. It's trading down $1 at 95.70. So it just gave back what it was up today. Numbers like this go on Disney. So the estimate was $1.61. They made $1.62. So bottom line is, it looks like they made that estimate. There must be there's something. They're saying that things are going great at Marvel, Pixar. Bottom line is, whatever it is, the market's not buying it. So what you have is that you're down $1, which is not a big deal. But what Disney does have, folks, is that Disney has a high volume swing low at 86, as well as 90. You know, that's going to make its way back down into those levels, and you know, we'll see what makes it shake and bake. If we go over to SPWR, which is SunPower. SunPower closed at a price point of $14.78. That's trading down $2. This company here, they sell integrated solar products. Numbers go like this. So let's take a look at it. Oh man, this is a monster. So they were looking to lose 24 cents. They lost 22 cents. Their revenue estimate was $339 million. They took $401 million. Now this equity here trading down $2, $12.87. This is going to be a sad case here. This looks like this is going to be an ABC down. So this equity, your A point on this is 22.35, which was the high of April 27th, 22.35. The most conservative way to do it, I'll take the B at 15.27. So you get $7. That gives you gives you $9.41. That's where this thing wants to go. And if we bring this back, this is traded as low as $4. Yeah, $9 is game on this. This equity at one point, folks, in 2007 was worth $164. Huge, huge number. Toasted, roasted, all of the above. FOSL. Let's see if Fossil come out with numbers yet. There she is. Fossil closed at $30.33. She's trading at $33. And numbers go like this on Fossil. Okay, the estimate, net sales estimate was $671 million. They took in $685. The estimate was 9 cents. They took in 12 cents. And if you do want to look, one of the targets we're calling on Fossil in one of the earlier hours, if you do look at this on a monthly basis, what you're going to see, this is kind of a classic that, well, it is a classic. It had tested the lows, did it on lighter volume. Bottom line, you're getting a $3 pop. Let's go take a look at, let's see if Jazz Pharmaceuticals come out yet. Jazz closed at 150, 149. Yeah, Jazz Pharmaceutical trading flat right now. That had an estimate of revenue estimate of 376. They came in at 381. The way this baby is set up, where is she? Okay, there we go. So this is a consolidation. This is it's gonna take a little bit more to get up and over this 160, but this is in a consolidation here. That's how that thing is shaking out. Coke, this is the bottler, I believe. Coca-Cola consolidated. It traded at 141. It's trading 141. Let's see if they came out with numbers. Yeah, they came out with numbers. Net sales $840 million. The estimate was $2.06, $2.03. They came out with $2.03. Let's go to a Jerry in Boston. Hey, Jerry, what's going on?
Hi, Tom. Thanks for taking the call. Thank you.
Sure. Thanks for calling. Thanks for holding, man.
Right on. Looking at McEwen Mining, MUX, M-U-X.
Okay, so let's take a look at it. You got McEwen Mining. This is a gold and silver producer. The low is 69 cents. The high's 4.92. You're trading out right now at 4.34. Now, do you own this? We looking to buy it? What are we doing?
Yes, sir. So I've ridden these guys up since probably about the 80 cents mark.
Nice. Yeah.
I've been taking profits all the way up. I'm completely out now. Sold the rest of my shares out today, but
good.
I think I'm, really looking to really want to get back in at some point. Just your thoughts on where that might be.
So what we've had here, folks, is this, and I can tell you, I'm so happy, Jerry, when I hear folks taking their money, because this run, if you were in the gold market or in the silver market, folks, from January to June, that is one of the biggest runs I've seen in 20 years, okay? You're talking about 100, 200, 300% on these equities. That doesn't happen in the marketplace, okay? So when you take the money, it gets even better. Now, that being said, which is really cool, is that now you, I, and the other folks that have taken their money, Jerry, right? We have to put, like, handcuffs on our hands around our back. Because what happens here, folks, is this. Is that I think it's going to take a couple months. Do you know what I'm saying? And it's worth it, though, okay? It's worth it because the gold market in particular is a volatile market. When you've gone up so dramatically, we're just, I see this as a 0.382 to 50 retracement, okay? And that being said, though, we know how this market likes to move, meaning the metals market. What happens, folks, is that it's a vicious market on pullbacks. So, where this pullback, where it broke out from, it very well, this is McEwen Mining, this can go back to 283. And if it does, guess what? You can have a freaking field day, man. The first place that I suspect it will go is like 348. What 348 is, that's the June 17th high. And, these are rocket ships, man, so it's not a big deal to get to 306. And if they do, what happens, folks, is that, the amount of bread made, you can double this thing up. You can actually just take what you started with when the thing was at 70 cents, take half of what you already took in profits, throw that, go buy a boat, go do whatever you want to do with it, right? So you know what I mean? And because really, isn't the question in your own head right now? Meskin in my head says, okay, hold it. If I wait that long, should I just plow it all back in or just take half of it? Because we know what the numbers were. They were huge, man. So
it's tempting.
But you know what the biggest temptation? It is tempting. But I think money management-wise, what we all should do is just take half of that bread, go spend the rest of it, man, and, because even with half of it, you're going to still have more shares if, in fact, you get that pullback, which I think we're going to get. Do you know what I'm saying? And the cool thing here, this is what the cool thing is, folks, is that how we actually did come up, we have volume, and what has happened is that you're just into a supply line. Like, if I bring this back, where are you going to see this? Every one of these gold equities, too, are into the same supply line. This is into a supply line going all the way back to 2006. That's the major supply line. So you can expect that, okay, you came off that low because that on the downdraft it was so vicious, okay? So the first leg up was a beauty, but guess what? Just have some patience, man.
Thank you, Tommy.
Have a great one, man. Have a safe one. You stay right there, folks. We're coming right back. Dow Industrials finished up 3, NASDAQ up 12, S&P's up 2.5. We're going to be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
Join Andy Hecht as he shows you how to make money in commodities. The Commodities Hour, next on TFNN.
Welcome back, folks. Let's go over to Solar City. Solar City closed today at $24.55. They just come out with numbers now. Tesla's buying them with, you talk about corporate governance. Well, the bottom line is that, they're getting toasted and roasted. Solar City and Tesla, basically shareholders. Bottom line, Solar City's loss swelled in the second quarter as the biggest U.S. rooftop developer seeks approval from shareholders to be acquired by Tesla. Net loss was $55 million, or 56 cents a share, compared to $22 million, 23 cents a share a year earlier. Bottom line, folks, is that, we'll see. TSLA, Tesla is bringing them into their company, but it's corporate governance-wise, it's a bad scene. It's a bad scene. Bottom line, though, it's happening. X1. Let's see with X1 if they just come out. X1. Okay, so this closed at 11:57. This hasn't. Yeah, this came out. Okay, so this company here, three-dimensional printing machines for industrial clients. This is a 3D printing. This closed at 11:57, trading 11:57 right now. Numbers go like this. Estimated loss was 26 cents. They lost 18 cents, so that was pretty good. Their revenue, 11.6 million. They took in 11.8 million. This is an equity that also has got killed over the course of time. Really killed, man. Oh man, holy cow! These 3D printers. So this equity went from a price point of $68, $68 down to $6. You're trading 11.57 right now. LSCC. Let's see if Lattice Semiconductor come out yet. That's trading at 602. That's trading 545. Oh, that's getting toasted. Let's see what they have to say. Okay, so the estimate, revenue estimate was 124 million. Oh, this is third quarter now. Okay, the quarter we are in right now, they had an estimate of 124 million. They only got to do 110 to 116. So that's what's cooking that stock right now. 545, so that's down 10%. That's going to go to its lower end of the consolidation that it's trading in. SCT, oh no, we already did Solar City. Disney, bottom line, made their numbers. That's trading down $1.25. Those high volume lows want to get tested. YELP, Yelp. Yelp closed at 32. That's trading 36. So let's see what's happening with Yelp. Evidently, Yelp is back on track. You know, Yelp's come off the low of 14 bucks. You're at 36. Let's see what they're saying. Their revenue is 173 million. They made 1 penny, and they were supposed to lose 7 cents. So bottom line, they went from a loss of 7 cents to a gain of 1 cent. That's a big number, no doubt about that. Jazz Pharmaceutical, has that out yet? Let's see. That closed at 150. That's trading at 148. They made their numbers. They're in pretty good shape, too. You stay right there, folks, because we got a big show coming up for you. We got Andy Hecht's 300th anniversary show. You have to love it. This is Tom O'Brien. This is TFNN. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it. Take ownership of it and fly with it. Everything you need is right inside you, folks. Grab it and have a blast with it. Yesterday's gone. Tomorrow's not here. What are you doing right now? Wow! Go get them, folks.